Good afternoon, everyone. Today is August 1st, 2010, and this is Trading High Probability. And we're going to take a look at the Dow Jones Transports as well as the Dow Jones Industrial Average to start off with on a daily chart. And basically, if the Dow Jones makes it, the transports ship it. And we kind of look to the transport as a leading indicator. And at this point in time, we're finding that we're now finally to start making a lower high, higher low, and we're starting to have a higher high. Well, this is good, and the Dow Jones is following the same suit. Here's our higher high, and here's our higher low. At this point, we can't confirm that this is a higher low until this turns around and starts moving up in this direction. Now, what we would like to see to say that this is going to be a bullish signal is that this crosses this 10,600 because of this resistance up here as well as right here. Now, we're not seeing it on the transport side, but on the Dow Jones, we're seeing this divergence set up. Look at your momentum and look at what's happened here. And we're making this run up on lower and lower volume as this is moving up. So this week is going to be a critical week to determine which direction we're going to go, whether we go up to the upside or we start falling apart to the downside. And this fluctuation, although it doesn't show it, this is really one heck of a movement. The last several days, we're getting a 200-point swing in each day, and we're winding up almost at a doji as of on this Friday. So we had a 200-point swing from top to bottom, and we basically went nowhere. Now let's take a look at the monthly chart of the S&P 500, and we're going to take a look at the SPY, which is the ETF of the S&P 500, which is our benchmark. Let's have a look at right here in July. July had a nice big candle up, and we started this down move, as you know, back in 2007, and we've now come back almost to the T at the 61.8% Fibonacci retracement level back in April. And this is also right at this aqua color moving average, which is the 50-day period moving average. And we stopped right on mark, and we turned around. So until we pierce this level here and we close above it, we're still in the bear camp that we're headed back down, unless we're now making a in the process of making a bull flag pattern and we bounce to the upside, which is too soon to tell at this point. This can also be looked upon as wave 1 down on a monthly chart, wave 2 up, went to the 61.8%, and now could be in our phase of wave 3 down on a monthly chart. Time will tell. We'll have to see what happens. Let's take a look at the weekly chart now, and let's kind of zoom in here. Here we have again the aqua color. This is the blue, the cyan color of the 50-day period moving average. We have the 135, which we take a look at a lot, and we also have the 200 period. And again, back here on April 30th, that 200 period coincides with the monthly 50 period, and sure enough, it stopped right on the mark, and we turned the corner and we came back down. Now, is this just a pullback and we're kind of breathing and shoot to the upside? Not too sure, but we're looking at this pattern now. We see something called what we like to say is a trap. Some people call it a head and shoulders, that inverted cup and handle. But let us draw this out for you and show you what we're looking at. Here is one side, which could be the shoulder. Here is the next side, which is the other shoulder. And here's the head. So any area that we finally close below this 104 or 1040 on the S&P, this is definitely a bearish mark. On the other side, once we close above this level here around the 113, 114 area on the SPY, it will invalidate this this head and shoulders, or this, let me just do this other drawing for you here, or what we like to call our trap. What happens is that you have this area here in which all these people finally jumped on the bandwagon and went long. They're saying, okay, if it gets below this, I'm out of here. And then it got to another new high, and these people probably added to positions, and now it came back down, and these people are trapped in here. They're no longer very happy. They're saying, okay, any other close, if it goes below this, I'm out. And this if this does close below it, it'll just propel it to the downside. On the other hand, any close above this area here on the shorter side, on the near term side, anything closing above this level here, which is around the 113, 114 area, will propel the shorts that got in short on this bar right here, and again over here, and especially on this bar over here once it broke that support level. They will be forced, or not necessarily forced, but they're going to want to cover their short positions, and this will just propel it back to the upside. So again, this is a very critical area. We're starting to consolidate a lot in here, and this can break out to either side. Right now we're sitting at the 50 period and the 135 period moving averages, and we're running up to some major resistance here. So depending on what happens with the China news and what's going on with our economic news coming out this week, we have a lot of economic reports, especially next Friday, or this coming Friday is the employment change report. We're going to get our new unemployment rates. That could definitely move the market in some direction. But this could happen anytime now. We're going to break out of this one way or another in a very short period. So if we close above this level or below this level, be ready to ride that trend in that direction. Now notice that, let's kind of zoom in here, this entire week, what happened? We basically went nowhere for this entire week. We created this doji right here. And we're going to get into this candle in another minute or so when we start talking about the daily candles. But I'm starting to see a little bit of a pattern here, and let's draw this out as I'm doing this video. Look at what happened here. We came down, and then we consolidated. And what happened? What is this, everybody? Come on, you know what this is. That's right.